Hey everyone, my name's Andy. I'm from the Finding Value Finance channel. Today we have with us Doomberg. You can follow him at Twitter. That's kind of where I follow him and where I found him. So thanks for coming on, Doomberg. I really appreciate it, to the Finding Value Finance channel.
Andy, great to be here. Congratulations on all your success and looking forward to what I know will be a rigorous discussion.
Good, thank you. So before we roll in, can we just kind of get a little bit about your background?
Yeah, you bet. So yeah, as you mentioned, I'm a big part of the Doomberg team. I'm the head writer of the Doomberg Substack. We're a small team of industry consultants that come from the sort of commodity and energy sector, deep finance background on our team as well. We've spent several decades working in the nitty-gritty heavy industries that actually make the economy run, that are now, of course, headline news, given the rolling series of energy crises that we have been chronicling and predicting since the very beginning of Doomberg. We publish on Substack 6 to 8 times a month. And as you said, we're also very active on Twitter, and those are the two main outlets for our content. And we've been blessed enough to have had enough success in building the Doomberg brand that content creation is now basically what we do for a living. So it's a super fun job. No shortage of interesting things to write about and to talk about on podcasts such as yours.
Mm-hmm. So you talk a lot about energy and commodities. Could you kind of describe what you're seeing in the energy markets and commodity markets, maybe looking backwards and forwards, so to speak, backwards from today, forwards of what to expect, and maybe perhaps sequence of events that you see coming?
Yeah, so when we analyze sort of global macro trends, given our experience in the energy sector, we think the first and most foundational question you have to ask yourself as you sort of observe the news flow and try to get your handle on where the puck is going, so to speak, to use a hockey analogy. The first question that you have to ask yourself is, are we in a period of primary energy access, or are we in a period, like we believe we are today, in sort of chronic primary energy shortages? That's a distinction that has profound repercussions across virtually all aspects of the economy and investment decisions, monetary policy, geopolitical intrigue, you name it. As we've tried to popularize, energy is life. And when you have a chronic shortage of energy, you have a significant risk to life. And that's in fact playing out today. And so we are in a period, we believe a multi-year period, perhaps even a decade plus long period of chronic primary energy shortages. And why is that? Several reasons. The industry has been attacked by the ESG movement, and in particular, the ESG movement has been very effective at choking off supply of the critical financing needed to deploy the massive capital projects that are necessary in order to ensure a cheap and ready supply of primary energy. Second sort of order phenomenon is the fact that the shale boom burned a lot of capital, didn't generate a lot of good returns. And then when the COVID-19 lockdowns happened and oil flipped, negative on that fateful day, a rolling series of bankruptcies occurred in the shale patch and other energy producers, and lots of energy producers lost the money and lost lots of money, I should say. And the companies that emerged from bankruptcy, newly capitalized with less debt, have a very strong mindset of shareholder remuneration as opposed to growth for growth's sake. And so we're seeing substantial resistance, especially amongst the publicly traded companies, to reinvest these sort of wonderful profits that they're enjoying because of these elevated prices, because of the energy shortage. They're not reinvesting those profits into new capital projects, but instead are engaging in extensive stock buyback and the issuance of special dividends, much to the chagrin of the Biden administration. So when you take all three of those together, you have what we have now, which is swimming really hard just to stay in place, tread water. Energy production, oil production in the U.S. is still a million barrels plus a day short from the pre-COVID highs. Much of the ability to get even that close has come from exploiting, a healthy inventory of drilled but uncompleted wells, which seems to be petering out. Some predict, although we're not sure, that we will begin to see significant challenges in the shale patch as depletion rates continue to be high, but new drilling is not occurring at a rate necessary to restock those inventories of DUCs. And then, of course, we have the geopolitical premium baked into the price of energy because of the Russian invasion of Ukraine, the attempted sanctioning of the Russian oil and gas industry, the circumvention of those sanctions largely by countries like India and China and Middle East. And so it's a real toxic brew of negativity as it pertains to the supply equation, which of course leads to bullishness on the price situation, which is, I'm sure, and as we were discussing before we turned on, you are positioned accordingly.
Yeah. So here's another question. As we look backwards, the Federal Reserve has always kind of responded to these markets with increasing interest rates and basically destroying demand. Do you think something like that's going to work going forward in an energy shortage type world?
Yeah, I have my doubts. As we're recording this, Powell gave his speech at Jackson Hole this morning, and the market has interpreted his remarks as being hawkish, and we're seeing a sell-off in the price of the indices. S&P 500 and especially the tech stocks are just getting hammered today as we record this. But at the same time, oil is hanging in there pretty good. Natural gas is still above, $9 at Henry Hub and exploded to $90 per million BTU in Europe. And something to keep an eye on is the JKM contract for delivery of LNG in Asia closed the week at $70 per million BTU. These are truly mind-boggling prices. And then, of course, this morning we had the next leg up in the unthinkably high German electricity prices. And so given how critical all of these commodities are at the very front end of our supply chains, it's impossible to imagine a scenario where that inflationary pulse doesn't find its way downstream. And in fact, we're seeing, large Verbund chemical sites at risk of closure. We're seeing aluminum smelters and zinc smelters shutting down and fertilizer plants shutting down all across Europe. Those materials are critical. And so what amount of demand destruction triggered by the Fed's financial tools would be needed to meet the clearing price of supply? This is the tug of war that's ongoing, and it's not clear to us which side is going to win. It's truly historic and unprecedented. It can't be compared even to the 1970s because of just the localized nature of some of these price spikes, and it's just truly staggering. I mean, it's hard to contemplate what the future holds for Germany, for example, and Western Europe. And we've said on several occasions that the resolution of the Western European energy crisis heading into the winter of 2022, 2023 is the single greatest geopolitical event to keep an eye on of the year, perhaps of several years. And it's not clear to us how it's going to end. We've been banging this drum for over a year, and we take no solace in having been proven right on much of this, but pretty scary times.
Yeah, and with all of those very high energy prices over in Europe, do you think those high energy prices are going to work its way to America at some point?
Well, in essence, they already have. $9.20 or whatever it's trading for Henry Hub this afternoon for natural gas is extraordinarily cheap compared to the rest of the world, and it's extraordinarily cheap compared to, say, the price of oil today. And just as a rule of thumb, I'm sure you know this, but if you multiply the price of natural gas by 6, you get a rough estimate of the price of natural gas as expressed in barrels of oil equivalent, on an energy basis. So at $9 here, you're talking $55 oil, but at $90 in Europe, you're talking $540 a barrel oil for natural gas. But my point is, $9.20 is still 4.5 times what the price was 2 years ago here. For two years ago, you couldn't give away natural gas. It was below $2 a million BTU. It was a nuisance. It was flared. It was, it stunted the growth of oil because there was literally no place to put the natural gas to lift it out of the shale patch. And we still have such problems in Appalachia, for example. There's insufficient pipeline capacity to fully exploit the natural gas available to us there. And so, yeah, in essence, and the boom of LNG exports from the U.S. to try to cushion the blow of Vladimir Putin's total control over European energy. We're now exporting 12 to 13 BCFs a day out of 100 BCFs total production. That incremental export comes at the expense of domestic storage, and that's why we're seeing the price of natural gas bump up here in the US. And there's going to be a turnover of power bills and new contracts, especially in the Northeast and New England, where they stupidly have to secure their incremental supplies of natural gas from the international LNG market, which means they're paying European prices, even though they're 4-hour drive away from Appalachia. It's insane. But such is the circumstance of energy and getting energy policy wrong. And it has leaked here. And in the long run, as you know, things that do the same thing can't sell for different prices indefinitely. And the global natural gas market has to eventually arbitrage its way to a band where the width of that band represents shipping costs. But that we're many, many years from that, and many tens of billions of dollars of investment in LNG import and export capacity away from seeing that reality.
And as these energy prices are high, and as they kind of make their way through all of these different inflationary numbers that we have, producer price index, consumer price index, and all that stuff, what do you think, or what do you see as the sequence of events? We see this large spike in energy prices. What do you think's next? Do you think it's going to move into, what next? Food prices? Are companies going to have to shut down? I mean, how bad is this going to get?
We're seeing much of it already, yeah. And in fact, our main concern is social upheaval. The old expression is 9 meals to crazy, right? Most people have very limited working capital in their homes of the essential goods that they need to properly maintain their lifestyle that they've become accustomed to. And as we've said on several occasions, on the path from abundance to starvation is riot. People will take the pitchforks before they just sit around and watch their kids starve. And that's why we're so focused on the winter of 2022, 2023 in Europe. God forbid it be a cold one or an especially frigid one, in the same way that the summer has been especially hot and dry, which is only adding to the crisis. But this could be very serious, and we've been predicting or worrying about severe rightward tilts in such economies, and a fracturing of the EU, especially around whether or not perhaps they should sue for peace with Putin. Because if peace were to break out over the weekend, you would see oil crash by $35 to $40 a barrel, natural gas would tank, and the world would be good again in many ways, unless, of course, you're long those commodities and betting on continued escalations. We have no such investments, and so we are pro-human and hope for such an outcome. But that's a big risk to the trade, of course, is that that peace would arise. Now, that does not seem to be on the table today. But if the support for Ukraine amongst the European capitals begins to fray, and there's popular uprisings and or either peaceful or violent overthrows of government, such circumstances could change pretty quickly.
Yeah. So oil itself, I mean, if talk about an energy crisis and whatnot, the only way out of this, in your opinion, is for a peaceful resolution with Russia.
Well, no, there's a second way out of it, which we have been advocating for, and it has fallen on deaf ears, which is we need to flood the market with supply. If Biden were serious, again, we said from the beginning, and I would say we've been proven correct, that our sanctions strategy was insane and destined to fail. Anybody who spent more than 5 minutes in the commodity sector knows that you cannot reduce somebody's revenue when they're a swing producer by trying to restrict the supply that finds its way to the market. Because let's just take Putin. Putin is responsible for, let's call it 10 million barrels of exports per day of oil. If we were to successfully cut 50% of his oil from finding its way to the market, plug his wells, destroy his wells, limit his ability to ship it or to pipeline it out of the country, if he lost 50% of his volume, the price of oil would way more than double and he would make more money. And just today, The Economist had a story that said, the Russian economy is doing far better than even the most, optimistic analysts. I would say we would have predicted this. His oil is not being restricted from the market, and there's a huge risk premium baked into the price of oil, which is just incremental money put in his pocket. And he's got the support of Saudi Arabia. He's got the support of China. He's got the support of Brazil. He's got the support of India. That's 3.5 billion people. That's half of the world. We act as though because Justin Trudeau and Joe Biden and the unelected bureaucratic leaders of the EU decide that they can put a price cap on Vladimir Putin's oil, that somehow it'll happen. These people are delusional. They're drunk on their own ideological views of what their power represents. Energy is power. Energy is the real currency. We gave the cards of leverage to Putin, and then we have the audacity to be annoyed at the fact that he's, quote, using energy as a weapon. What do you want him to do? We gave him that weapon. It's like giving a criminal all the guns in your house and then wondering why they're holding you up. It's so stupid and so frustrating, but alas, here we are, and the consequences of it are being realized. Putin is printing cash. That cash is funding his war machine. So instead of suing for peace, an alternative strategy would be, let's get together with industry, drill, baby, drill. Just Biden standing in front of the press, hand in hand with the CEOs of the major oil producers, suing for peace with them and willing to collaborate with them. What do you need? Which pipelines do you need? Well, we're going to pass, new laws that swiftly get the permitting process under control and eliminate nuisance lawsuits on the part of environmental radicalists. Just doing that would knock $20 a barrel off the price of oil, because that's probably the political risk premium in the US for things like export bans and so on. But instead, we're doing none of that. We're attacking the producers of oil. We're threatening them with excess windfall profit taxes and even jail in some instances. And then we wonder why they won't do our bidding. Again, it's so ass backwards and so insane to see that there's not much hope for it. And so that's why the price of oil is going to go back over $100, and natural gas is going to cross $10 per million BTU in the US, and Germany and Europe are going to run out of natural gas and have rolling blackouts in the dead of winter. Like, it's just totally foreseeable, totally predictable, and utterly avoidable, which is just truly catastrophic.
Now, if we do get resolution or peace with Russia, and I know that you said earlier that we could potentially have a 5 years, decade-long kind of tight energy shortage, or we'll call it a squeeze in the market of energy. Do you still hold that stance if we were to get peace with Russia?
It would certainly take a lot of the wind out of those sails. Again, part of the shortage, and certainly localized shortages, are because of the fragmentation of the supply chains, right? And so whole swaths of the world are just refusing to traffic in Russian energy, which is fine. Given the level of the sanctions, I guess that's the appropriate response for those who want to stay in good standing with the Western rule of law. And that's leading to huge shortages in concentrated areas. But then that has second and third order knockoff effects, where if an area is suffering from extreme energy shortages and they happen to be a dominant producer of a critical material, well, that puts the future supply of said critical materials in doubt. For example, fertilizer production in Europe. Fertilizer is a globally traded commodity. Prices are set at the margin. And so if you're CF Industries with a giant fertilizer factory in the US that is leveraging cheap local natural gas, you're basically selling solid natural gas on the international market for extreme spreads. I mean, if the incremental price of fertilizer is set at $90 per million BTU natural gas in Europe, and you're paying $9 per BTU natural gas in the US to make your fertilizer, you're printing cash. So, the fragmentation of the global economy and the running in reverse, the sort of trend of the last 40 years, where trade was ever easier and deflation ruled the day, you run that in reverse and you get the reverse of the benefits that we had back then. And when we're seeing that play out now.
Do you think there's any, I'll say, threat, or do you think Russia's kind of doing this on purpose, obviously, to maybe perhaps attack currencies of people's countries? We'll say highly indebted countries that are basically printing fiat to buy commodities or assets. Do you think some of it, I mean, I should say, doing what he's doing, is there a threat to our currencies? Put it that way.
To some currencies, the euro in particular has been decimated. The Japanese yen has been crushed as part of this. In fact, we've tweeted and written a little bit about the fact that the common method for measuring the strength of the U.S. dollar is the DXY, but the DXY index is composed. 83% of that is the euro, the Japanese yen, and the British pound, and all three of those geographies are vastly short energy, which is why you're seeing their currencies weaken. Look at the hyperinflation that's going on in Turkey, another importer of energy. Where you have exporters, predominantly exporters of energy, like Brazil or in Russia, famously, the ruble has strengthened to, pre-war levels and beyond, and the Russian interest rates, which were 9.5% before the war started and spiked as high as 20% at the peak of the sanctions frenzy, are now back down to 8%, 1.5% lower than they were before the war. And the Russian economy is doing just fine. Who is being hurt by these sanctions? We're talking about shortages of energy in Western Europe and spot shortages of supply chains in various developed countries. Australia having a gas crisis, even though it's one of the greatest producers of natural gas in the world. At what point do we perhaps take a pause and say, who's being hurt by these policies, and why do we trust the architects of them who put us in this position for the next decision? It's really remarkable.
Yeah, and I know a lot of the things that they're implementing, governments around the world, with renewable energy, electric vehicles, and all these things. Do you think those are viable alternatives or solutions to the problems that we have today?
No, we have put out several policy statements, and energy proposals, I know that you read our stuff, so it won't be a surprise to you, but we're huge proponents of nuclear. We believe that a smart policy of building out a massive fleet of the latest generation of nuclear reactors for our baseload power, and then saving our diesel for our mining operations and our natural gas for heating homes and perhaps peaking power plants, and then saving oil for our chemicals needs and pharmaceutical needs. Nobody's going to drive the use of fossil fuels to zero, but if we have decided, rightly or wrongly, that the carbon emissions is a parameter around which we would like to optimize our economy, then the smart to do so, which is totally possible, and there's no technical challenges to it, and there's not really all that many economic challenges to it. It's merely just political will that stands in the way of what we would describe as a nuclear utopia. A massive investment in nuclear power, combined with smart rollout of plug-in hybrids. There's a chronic shortage of battery materials. And so having a 100 kilowatt hour battery in a GM Hummer makes absolutely no sense in the world, but having, 6 18 kilowatt hour batteries, or, that can get you 35 to 40 miles of driving range on electricity before the internal combustion kicks in, and thereby abating 90% of the fossil fuel emissions of, let's say, 6 drivers. Well, by the math is simple. You could either abate 100% of the onboard emissions from 1 full battery electric, or 90% of 6. Well, that's 5.5 times better. And if batteries are a constraint, that constraint must be managed too. And so in a world where we take advantage of our cheap natural gas to make polysilicon, because there will always be a role for solar in our energy fleet. And in fact, there's so much energy hitting the earth from the sun that we're big proponents of, at a minimum, continue to investigate breakthrough methods to harness it. But for now, we have a technology that exists. It's economical. It's totally safe. It's nuclear power at the core. Fossil fuels where they're best used, both for heavy industry and the production of steel and the production of chemicals and so on. And then a smart policy of plug-in hybrids, where we can take 60, 70, 80% of the carbon emissions from the field out of the transportation sector. A fleet of plug-in hybrids charged at night by nuclear power reactors is just about as good an outcome as we can expect. And it's all totally viable, requires no invention, pretty realistic economics. All that's missing is political will. And we have not yet suffered enough pain to induce that political will, in our view.
Yeah, and inducing pain, as you brought that up, do you think we're going to get in a situation where, hopefully I can describe it correctly, where they put in all these policies to basically say option A, or our option of preference, is renewables, electric vehicles, but with mineral constraints, commodity constraints, will that option not be a viable option? And could there be a large gap between today and putting in viable options like nuclear out in the future? So they basically said, go to option A of renewables and electric. That won't work, but it's going to leave us this large gap between today and what is viable.
Well, long before we confront that gap, we will have to confront the grid stability issues that such a policy lays bare very quickly, which is exactly what we're seeing in Europe and what California is trying to replicate, and what Ontario could be looking at if they don't get smart about their nuclear policy. Everywhere it's tried, it fails. Because the primary thing that we haven't talked about is that wind and solar, in their current manifestations, deliver highly intermittent power, which is totally destabilizing to a grid. And so everywhere it's tried, Germany, California, pick your favorite, it leads to higher grid prices, rolling blackouts, energy poverty. It's just undeniable. The data, it's not like even close. It's just crazy. And so I don't know how many times we have to prove this to ourselves. The Biden administration seems dead set on replicating the catastrophes that are unfolding in Europe. It's pretty rare in human history that otherwise seemingly intelligent political leaders can look at the exact results of an experiment, see that it is a catastrophe, and decide we should do more of that here quicker. It's baffling. It's truly outrageous when we have the counterexamples. So in a piece we wrote about nuclear energy called Malthusian Malarkey, we chronicled the amazing story of Ontario, which in a span of 10 years completely eliminated coal from its electricity grid. More than 90% of the current electricity in Ontario comes from basically carbon-free sources like nuclear, hydro, and wind. Less than 10% comes from the burning of natural gas and some oil. 0% comes from coal. And they were able to do this for because of two words, nuclear power. Nuclear power provides 60-odd% of the base load capacity of the Ontario grid. Last I checked, Ontario was a great place. There weren't radioactive rivers and green people walking around contaminating the environment. They have abundant energy. Life is good. It's a modern Western democratic society with decent standards of living and pretty good income inequality statistics. This is not some catastrophe to be avoided. It is a utopian outcome to be replicated. And yet, instead of replicating what Ontario did, even Ontario is trying to undo it. And then in the US, we're looking at Germany, which is the single greatest catastrophic mismanagement of an energy infrastructure ever in the history of the world. And we're trying to replicate it here. It makes no sense.
So we've got this gap. And what I usually look for is I look for these gaps for investment purposes. Do you think we're just going to flick all these nuclear power plants that are in existence around the world back on?
Well, we're starting to see that. Japan has announced that they're going to turn 9 back on. Germany is still resisting in its infinite stupidity doom loop, the saving of its 3 existing remaining nuclear power plants and turn it back on the 3 they just turned off. But to his credit, Governor Newsom in California is looking to perhaps extend the life of Diablo Canyon, which is the last remaining nuclear power plant in California. And look, that one power plant provides 10% of the state's electricity and 20% of its base load. One nuclear power plant. It doesn't take too much of a mathematician to say 6 might solve their problems. If we add 6 more, you got 70%, and then okay, now you're dealing with house money here. You got some excess. You got some, you got some flexibility. You have wealth. Instead, you have rolling blackouts, and it's just so crazy. And so, yeah, I mean, we're starting to see those milestones. If as we described in the piece, Malthusian Malarkey, the Pickering nuclear power plant in Ontario is saved. Belgium recently reversed course on shutting its nuclear reactors. China, of course, you watch what China says, not watch what China does, not what they say. They've got 50 nuclear reactors in development, another 100 under design. India is building out a massive nuclear fleet. The holdouts are all of the sort of out of touch cocktail party dwellers, like Trudeau and Australia and Biden, who somehow have convinced themselves that nuclear is some taboo to be avoided. And they will ultimately suffer at the hands of their voters, one way or the other, because the people won't tolerate it.
Yeah, I agree. And do you think there's any other solutions other than nuclear that could solve our, we'll call it long-term energy problems if we go at a decade plus?
Well, I mean, again, there's no need for other solutions. The fact that one exists and we refuse to implement it tells us that this is not a technology problem. It is a political problem. And so solutions to political problems involve better politics, not new technologies. I would argue, and we have written, that there is no technological breakthrough that the environmentalists won't oppose for some made-up reason. So if nuclear fusion was invented today, and there's absolutely no nuclear waste, and it's effectively free, limitless power, they would oppose that with a violence that would shock you. Because at their core, they are anti-human. They don't want humans ruining the precious planet, especially humans that don't look like them or live in faraway lands. And it's a deeply disturbing cult-like strain, this Malthusian strain that runs deep into the history of such organizations like the Sierra Club and Greenpeace. And there is no technology that would satisfy them, because their objective is not abundance of energy for humans. Their objective is less humans. And we should be forcefully saying that out loud more often, because we've let them get away with such anti-human thinking for far too long.
What about something like an alternative energy like hydrogen? What's your take on hydrogen and using hydrogen as, and I know it's an energy or it's basically a battery, a storage of energy, but what's your take on that?
Yeah, our latest piece, by coincidence, is called the Hitchhiker's Guide to Hydrogen, where we do a fair and balanced assessment of the technology. Again, in a world where we have a fleet of nuclear reactors and relative energy abundance, there's probably a role for a relatively inefficient energy carrier like hydrogen. There are some advantages to it. It combusts and it produces power with only producing water as a product. And so you can imagine a fleet of electrolyzers powered by small modular reactors, filling carbon reinforced pressure tanks in internal combustion hydrogen combustion type vehicles, which we think would be a superior use of that hydrogen versus fuel cells, because fuel cells use an enormous amount of precious metals like palladium and platinum, the platinum metals. And so, yeah, there is a place for it in a world where we have cheap and abundant energy. But as we started this podcast by saying, that's not the world we live in today. And so hydrogen makes no sense in a world where we have an energy shortage. And if CO2 is your main concern, it makes no sense to lean on hydrogen in a world where 87% of our primary energy is still extracted from fossil fuels.
And in an energy short world, I'm just trying to, it's so different from the paradigm that we just came from, like energy abundance. They use interest rates to kind of control demand and all of this stuff. Now, looking forward in this energy short world, what does that necessarily look like? What should we as investors, or what should we as people and societies, what should we look for as indicators? Maybe we should look at Europe and say, look, this is what is happening there. That's probably going to come to America next. And then we should prepare, however, for it. I mean, should we be moving to, I mean, just as individuals, move to a warmer location, put in solar panels on your roof to mitigate electricity costs? I mean, what's kind of someone to look for and to do action-wise?
Well, it depends where they find themselves, of course. We're big believers that preparedness begins in the home. And so just thinking about a preparedness mindset and having a reasonable supply of food and energy and other disposables that are key to the operation of your household is prudent. It's both an insurance policy and a protection against inflation. So I'm not afraid to admit it. I'm a prepper of some substance. I think deeply about my home as a factory And that factory's product is the health and well-being of my family. And that factory has, 4 inputs and 2 outputs. The inputs are electricity, natural gas, goods and services, and water. And the outputs are garbage and sewage. And I have a plan for losing any and all of those 6 for an extended period of time. It's a reasonable plan. I'm not a hoarder. I don't have, I don't have 5 years worth of food and the ammo to protect it. But I have a prudent amount of excess working capital in the things that we need to successfully operate our factory. And you could do that if you live in the US, virtually anywhere. We would not live in a city because it's very difficult to prepare. And the cities would be the first to suffer substantial damage in, say, like a grid down situation where somebody attacked our grid. Cyber attack on our grid is not out of the question. And so if New York City lost power within 3 or 4 days, the fabric of the city would collapse. You would see riots in the streets. You would see hoarding mobs of people looking for food to feed their families. You would see an outbreak of crime that would shock you. We would never live in New York City. Every time I travel to New York City, I'm sort of always anxious to get out of it because I don't feel comfortable there. So for me and for us, preparedness starts at home. There's no shame in that. Being a good provider for your family involves thinking about such edge cases and ensuring against them in a reasonable way. Again, if you have 35 or 40 or 50 days worth of food and excess of the disposables that your family needs, if you walk around your home and just take a list of everything that you consume, hygiene products, medicines, shampoo, soap, toilet paper, and just get a sense for the rate at which you go through it, and just decide that I'm going to allocate a higher amount of working capital to keep such things in storage and rotate them appropriately. You sleep better at night knowing that you could shut your doors for 30 days, and as long as, say, water is coming in, you'd be fine. And so those are the types of scenarios that I treat as a hobby. I read up on the subject, and I invest a fair bit as both a hedge. When you insure your home for a year, and let's say you spend $1,500 a year to insure your home. At the end of the year, it's not like you're disappointed the home didn't burn down. You're glad that the home didn't burn down, and you just pay the insurance as a cost. Why not treat increasing the amount of working capital in your home with the same mindset? That's all that we teach our clients and we advise our friends to do. And I think that's pretty simple enough. You just want to wipe out the true edge cases and be ready for sort of disruptions.
Yeah, and that makes sense. Is there anything else that you'd like to add in terms of anything? It could be energy related, food related, or anything like that you see coming.
I think we've captured it pretty well. We'll see how things evolve. Again, our main focus is on Western Europe, and this seems to be a set of countries running full speed into the hard wall of physics, and we shall see how that resolves. And then that's sort of a singularity type event, the other side of which is very difficult to predict until you see resolution into the primary issue. And we expect that to come within the next month or two, really. I mean, you can't have electricity prices, 4-year electricity prices at 900 euros per megawatt hour with a bid-ask spread of 300 euros like we see this morning. That's a broken market. The electricity markets in Europe have broken. What's gonna come of that, nobody knows, but that's what we're watching most closely, Andy. So yeah, that's probably a pretty good place to wrap up.
Okay, that sounds good. So if anybody wants to reach out to you, how do they do that?
Yeah, you can find us on Twitter at Doomberg T, as in team. Unfortunately, somebody's squatting on the Doomberg handle, but most of our writing and all of our research is available at doomberg.substack.com. We're a fast-growing finance Substack. I think we're number 2 in the world in the finance category, and we hear unofficially that we might be in the top 10 across all categories on the platform, which is amazing to us and something we're very proud of. So that's predominantly behind the paywall. We are 100% subscriber supported. We take no ads and no sponsorships, which we believe allows us no holds barred as we write our pieces. We're free to express ourselves, knowing that we have the full throttled support of our subscribers, which is both amazing to us and very humbling. And so that's where you can find our work. And Andy, I really appreciate the opportunity to come on, and congrats and continued good fortune with your show as well.
All right. Thank you for coming on. Appreciate it.
Thanks.
We'll catch you next time.